And we're going to study supply and demand structure. Right? So, and we are going to study, we're going to study how do we trade supply and demand? Actually, how do we trade those zones? Trade SD zones. Yes, only these few stuff. So we'll study these ones and I will do analysis of one pair if we have time. We'll decide which pair will do the analysis. Hope you're all okay and everybody's there. So I'm going to start. Let me start with introduction to supply and demand. As you all know that supply and demand, most of the traders, they take supply and demand as support and resistance, which is two different things. When we talk about supply and demand from economic perspective, it's just a simple knowledge that once we speak of supply, we mean we are supplying something. We are supplying either the service, we are supplying either the products. When we talk about demand, that means we are talking about demand that people are willing, people want something. That's the demand, either a service or it may be a product. So from the real world situation, when we talk about supply and demand, one example you can hear from, actually we all know that if you have, for example, if you have 10 cell phones maybe, and you want to sell them, maybe you want to sell them to 100 people and you have 10 cell phones. That means the supply and the demand, they are not equal. That means the supply is minimum compared to the demand. The demand, there are 100 people and phones are 10. So that means the price will go high. Because if you have 10 cell phones and you want to sell to 100 people, that means not all of them, they will have that. So by saying so, you will raise the price so that the ones who are able to buy that phone, those cell phones, they will have the service. So these scenarios and these concepts are the ones which we are going to apply them on financial markets. And very simple. By definition, when we talk about supply, we mean that area whereby a commodity is so cheap that nobody can buy. Let me put it that word. When you talk about supply, we mean it's a state or it's a zone. When we talk about in terms of financial markets, it's a zone whereby a commodity or a financial instrument, it is so cheap such that nobody is there to buy. Right? Are you understanding me? Hello? Hello?
Yes.
Yeah. So when we talk about
yes,
what do I mean when the area is so cheap? The service is so cheap. Service is so cheap. What if we talk about the price is raised from 10 to 20 and nobody's there again to buy that? That means you have to sell it so as to take it down to the price and giving the room for other buyers to come back and buy it, right? So those are the principles we're going to use on financial market. That's the core strategy of supply and demand relies on. So by definition, supply is that zone whereby the commodity or financial instrument is so cheap that nobody's there to buy. So only sellers are willing to sell. And when we talk about demand is a state or it's an area whereby a commodity or a financial instrument, it is so expensive. It is so cheap that people can buy, right? It's so cheap that people can buy. That means it is very cheap that the price is very low, so more buyers are willing to take it. That's an area of demand. Those are simple definitions of supply and demand that I can talk about. Okay, let's go to when we talk about supply and demand structures. Supply and demand structure, actually, I'm sure that all you guys you are aware of. Guys, can you switch off your mics, please? Can you switch off your mic so that we can hear each other very well? Okay, now we're good. So we have already, okay. Currently new participants will be okay. Okay, guys. So when we talk about supply and demand structures, I'm sure that everybody knows them. Supply and demand structure. That means that means when we talk about those three structures, not three structures actually, there are two structures. We mean valleys and peaks and CPs. Valleys and peak and CPs. Those are two types of supply and demand. Types of SD. That means we have valley and peaks, and we have CPs and PCPs. So I will talk about actually just an introduction of these tools. I won't go deep. When we talk about valleys, we mean is that area whereby the price it is so cheap that buyers are willing to buy that pair or an instrument. When we talk about pair, I should not concentrate on the pair. I should talk about instrument. They can be stocks, they can be whatever. So a valley by structure is what they call it a drop, base, and rally. So a valley is what they call is a drop, is what known as a drop, base, and rally. That means price, well, let me draw it so that you guys can understand. That means price drops. That means price drops, then we have a base and price rally. This is the valley shape. This is one example of a type of supply and demand. So when we talk about peaks we mean is that area on a financial market instrument that price it is so expensive that nobody can buy. So we're willing sellers to get into the market. In terms of structure, the valley is known as a rally, base, and a drop. That's a peak, I mean, sorry. When you talk about the peak, that means it's a rally, a base, and a drop. These are the structures that represent the peak on the market. And this is a structure that represents a value on the market. So this is one example of the type of supply and demand. So let's go to another type of supply and demand, which is the CP and pre-CP. When we talk about CP, it's just an abbreviation that stands for continuation pattern. A CP is a continuation pattern that market tends to form when price is moving. Either it's going down or it's going up. So we have structures. So for the CPs, we have two CPs for the upward trending market and downward trending market. For the upward CP for the upward trending market, in terms of structure, it is rally, base, and a rally. That means price rallies by increasing the price. It bases, that means the pause, and then it rallies. That's the meaning of CP. So the market tends to form some pause on the market where some orders are generated. Okay, we'll talk about orders when time comes, not today. That will be the rally, the base, and the rally. This is a CP structure for the uptrending market. When we talk about a CP structure for the downtrending market, that means we have a drop, a base, and a drop. We have a drop, a base, and a drop. A drop, base, and drop. That means price falls, and then the market pauses, then it falls again. So these are the areas that we are going to be putting our orders. But it's not that whenever the area you find, you put your order. There are some rules you have to follow. That's why we have to do multi-time frame analysis or top-down analysis, if you guys know this word. So it's aligned with a lot of rules so as to trade these zones, but these are general zones that are guiding the supply and demand thing in the financial market. I hope the introduction you guys have understood it. The SD structures, you have understood it. And when we talk about how to trade these zones, I'm going to wrap this area, all the drawings. How do we trade these zones? We are trading supply and demand zones once that zone meets the requirements that we all need. Actually, I have my requirements. We have a lot of traders who are trading supply and demand, like Raja Sahil, all those guys, a million pips. We have a lot of scalpers who are trading supply and demand, like savage scalpers. So everybody has the rules, but there are general rules that everybody is using them. But once you do the back testing on the market, you'll add on one of the rules so as to make your trading with a lot of risk reward or a lot of the profit margin. So let's talk about how do we trade these zones. I'm going to draw a certain structure of the market. Let's assume this is a market and it is rising and falling, rising and falling, rising and falling, rising and falling. This is an uptrend market. So once the price is at this point, the rules of supply and demand, they're not allowing you to sell unless you have a zone that has meet the certain properties which you are following, or certain rules which you are following, so as to trade that zone. Okay, we are going to identify those structures which you guys have been talking about previously, the valleys. The valleys are nothing else than these levels here. These are the valleys, these are the peaks, these are the valleys, these are the peaks. Oh, sorry, these are the peaks. This is the peak, this is the peak, this is the valley, this is the valley, and this is the peak. So you might ask yourself, where do we find those CP patterns? You may ask yourself, where do I find those CP patterns? The CP patterns, they can be found in the middle of the price movement. This is the middle of the price movement. This is the middle of price movement. This is the middle of price movement. This is the middle of price movement. So at these areas, this is where we find the CP patterns. Sporty, so you guys hear me? I don't hear anything. Fuck you. Wait. I'm scared. I'm not bad now. I've paused the one. Hello? Okay, now you can hear me. Okay, check the internet. Check the internet. Oh, guys, sorry guys, I was having some internet issues, but we are good now actually. So this internet is fucking me off. Okay, now we are going to talk about these CPs. Where will I find these CPs? You'll find the CP patterns in the middle of this price movement. This is the middle where the price movement is actually where we find the CPs so as to trade with the trend. So how are we going to trade these zones? We are going to trade these zones at the valleys. We are going to trade these zones at the peaks. We are going to enter on the market if it is trending at the CP pattern. For example, if the price has moved to this level, and this is the valley. So if this is the valley, how am I going to trade? I'm going to place my order here. Once this zone meets the criteria, we'll talk about those criteria. There are a lot of criteria that the zone is validated to be tradable. Not all the zones on the market are tradable, because if you go to the market, once we reach the point of doing analysis of one pair, that pair I've told you when we start the webinar, you'll find out that there are a lot of zones that will be leaving them without marking them, but we'll choose the ones which are actually they have met the specifications. So let's assume this is the zone which has met the specification. What you'll do, you'll put your order here, a buying order, a buying stop. Okay, somebody has raised their hand. Oh, hello? Okay. So we were talking about, you guys are hearing me? So, somebody has raised the hand. Somebody has raised the hand.
Unmute my camera.
Who is this guy? Okay, okay, let me unmute your mic. Let me unmute your mic. Sorry, okay. I'm hearing you. Hey, can you speak it out? Hello? Hello? Okay. Okay, so here is where I will put the order. Here is where I will put the order. Here is where I'll put the order. And once the market comes back, it will check my order. I'll put the order here, and I'll put the stop loss beneath the zone. Why? Because I won't put the order at this line, because market sometimes has higher liquidity. We'll talk about the zones. I'll talk about how to draw these zones, just an introduction, so that you guys can understand. So once the order comes and picks you at the valley, price will go on moving. And once price moves, forming more than two valleys, that's where you can draw the trend line. That is where you can draw the trend line. Okay, so I don't get where my tools. Where do I get the tools? Drawing tools. Okay, I'm trying to search for the drawing tools here. Where do I get the drawing tools? So that I can show you how do we draw those zones actually in a mechanical way, because there are people who are using. Okay guys, let me share some of how do we draw the zones. Okay, hope you guys you get my screen. I'm going to show you how do we draw the zones. I'm going to show you how to draw the zones actually exactly on the trading view, so that we can all understand each other. Okay, here is my trading view, and these are the pairs I'm trading. I'm trading most all of the pairs and the commodities. So we're going to talk about one pair. Actually, I'm going to show you how to draw the zones. We're going to talk about one pair. Let's talk about actually let's take this pair. Yes, Cardi Chef, Canadian. Yes, and she's Frank. So I hope you guys you get the picture here now. So this is the chart. This is the daily chart. How do I draw the zones? And how do I get this? How do I know this is the zone? We've been talking about the rally, the base, and the rally or the drops. The rally stands for the price moving up. The drop stands for the price moving down. The base stands for the price is in consolidation. That's a simple definition of price being a base. Price being within a base. Huh? Okay, you guys. Okay, I'm speaking very fast. Somebody is saying I'm speaking very fast. So we're going to talk. I was talking about the base. The base is actually the consolidation of the price. What do I mean by saying consolidation? Price is either moving up, then it pauses. How do the price pauses? Price pauses means they allow other retailers. Actually, we are trading with professionals. We are trading with financial institutions. So once they rise the price up, then they pauses. Pausing means they allow other people to get into the market and move the price. People are moving the price in sideways. That's a consolidation. That means that's the base, that's the pause on the market. And once they want to get into the market, you'll see the price going up. Okay, so this is example of the price moving up. This is the price moving up. It moves up, it moves up, then it pauses. You see the pauses, price moving down, it pauses. You can see the pause. There's a difference between this rally of the price and this rally of the price. Here we have 3 candles moving up, and here we have 3 candles ranging on the same level of price. This is what we call the base. This is what we call the base of the market. No matter how many number of candles, that's another lesson. We talk about how to qualify the base to be tradable. But right now we're just going to identify how do we know this is the level. So it is the level. Why it is the level? Because the price, it has paused. Price has paused. Once the price was rising, from this rising, and then it pauses, then it rises up by this candle, 1 candle. So once price came back, there were some orders here, and then rallies up. So this is one example of a supply and demand CP pattern structure. We've been talking about the rally, the base, and the rally. This is the rally, this is the base, and this is the rally. How do you understand this is the base? This is the base, I repeat, you understand by seeing the nature of the price action. This is where the definition of price action comes. That means you study how the candlesticks formations are. I can talk about, you'll never say this is the base. Why? Because this is just a rallying of price. Price was moving up, then it moves down, then the buyers came on the market, they pushed the price up, and then they made the pause on the market, and then price went up again. So price went up from this level, then it pauses at this level, and then it went back to this level. So once the base was formed, this is the base which was formed, and this is a continuation pattern of the price moving up. Since the price was moving up, this is the continuation pattern. This is the price action formed to show you that the price is in an uptrend. You have to get into the market at this level, at the pause of the market. You cannot get into the market at this level because sometimes price may go back, may moving up and down. The emotions will get into you, and then you will get off the market with a loss. So we get into the market at the zones that are requiring us to be in the market. This is one of the level where you can get into the market. I'm not talking about it's exactly the level you can get into the market, but it is the structure that allows a trader to get into the market. So when we talk about the valleys and peaks, example of the valleys and peaks, this it is the valley. This it is the valley. Why am I saying this it is the valley? Look at right now what I was talking about. Price was dropping. Look at this candle drop, and this it is the candle was dropping, but it failed to drop. I mean, this is the candle that was dropping. Once this candle was closed, another candle that pushes the price up. That meaning it forms V shape of the price. V shape. So this is the V shape, and this V shape doesn't have actually many basing candle. It only have an engulfing candle. This is an engulfing candle. So this is the basing candle, right? This it is the basing candle. So this is the V shape, we have the drop, of the price, we have the base, and we have the rallying of the price. Price rallied up. This is one example of the V-shaped structure. How do we recognize it's a V-shape? Because the price was falling down, then it formed an engulfing pattern. Forming of an engulfing pattern, that means the price has formed another structure. This is the price action we need to study. Let's check another example. Another example of let's check up another example of the V-shape. Let's go to okay. This is another V-shape. Another V-shape is here. Another V-shape. This is a V-shape. Price was falling down. Price was falling down, and then it formed. You can see this is how people are saying it from this. Oh, okay, thank you so much. Okay, I can say you can see this pattern. I'm not good in pattern identification, but there are patterns that you have a bearish candlestick, and then follows by the bullish candlestick that is within the opening and close of the bearish candle. I don't know that name of that pattern because I don't trade patterns. I know you guys, there are some people who are trading pattern here, so I don't trade pattern. This is the pattern, but in supply and demand, these represent a V-shaped structure of the market. How do I know this is the V-shaped structure? Because the price was falling and then it started rising up, forming a V structure. So it is a V-shaped structure, supply and demand. That means we have a drop and we have a base as the peak of the valley. I mean, as the at edge of the valley, and then we have the rallying of the price. This is an example of the V-shaped structure. This is example 2 of a V-shaped structure. So it's not a rule that once a V-shape is formed, price will come back to that zone. No, because we are not the ones who are moving the market. So those guys who are moving the market, they know how orders are filled in the market. Because let me talk about this thing. How do I mean by orders? You know, in simple logic, when we talk about Forex market, we mean we are buying and selling. Buying and selling, what are we buying? Are we actually exactly buying these digits you are seeing for the price? No. This scenario of buying and selling, it is done by the big financial institutions. Those are the ones who are doing the business. Those are the ones who are doing business how? Those are the ones who are buying and selling a certain instrument with a lot of money. So they are not seeing this price. We are the ones who are seeing this price. We retail traders, we are the ones who are seeing this price. Those guys are buying. Somebody is putting the order of $1 million, maybe whatever. So those are the orders which are moving the price. Those are the orders that I'm talking about. Order flow. Those are the order flows. Buying order flow, selling order flows. That's an example. That's what I was meaning when I saying orders. So let's try to find the valley. I mean the peak of the market. You can have this as an example. This is another example of the peak on the market. You can see this is an example of the peak of the market. This is the peak. Price was rising up, then it started falling, creating an engulfing pattern, bearish engulfing pattern, forming a supply zone. A supply zone, what type of supply zone? This is the peak supply zone. That means we have a rally, we have a base, and we have a drop. So these are examples, simple way to identify these levels, peaks and valleys. So identifying the continuation pattern, you can identify the continuation pattern on the way price is moving to that a specific direction. For example, after the price has formed this peak supply, price was moving down. Once the price is moving down, you as a trader or me as a trader, together we are going to trade in this downtrend market by entering exactly at the levels where those orders are left behind. I mean, where the market is pausing. For example, price was dropping down, right? And then we had a consolidation here. Never mind, we're not going to clarify or validate the consolidation. This might be a base. This actually not might be a base. It is a base, but it's not a tradable base. We'll reach at that point next time, or maybe whatever. Another time we'll talk about how to validate these zones. So it is a base. Price was dropping, then it forms a consolidation, and then it drops back. So me and you, we are supposed to enter at this level. So as the price to go with the trend was down. So to go with the trend, we cannot enter exactly here at when the price was dropping. We'll wait for the price to form a suitable area where to get into the market. So price was dropping, it bases, then it drops. After dropping, then we have another base formed. This is the base, because you cannot tell me what direction exactly of the market was in here. So this is the base. Price drops again, right? You can see price drops. It was trying to go up to that level to fill other orders, but the liquidity was very high. Some orders were left behind. So this is an example of continuation pattern. Exactly. When we talk about continuation pattern, these are continuation pattern we are talking about. We can check another example here. When the price was rolling up, we have this continuation pattern. Price is trying to form them. Once it moves up, we have, like from the example from here, we have rising of the price. We have this level here. You cannot tell me the direction of this level, because price rise, then it falls, then it rises up. So this candlesticks confirmed that this level was the base of the market, because it closes above this level. So this is the base of the market. We have a rally, we have a base, and we have a rally. This is another example of the continuation pattern on the market. So this is how we identify these zones. Not all the zones we identify, they will be tradable. We have rules we follow, drawing zones. We have how to clarify the zone, how to validate the zone to be tradable. There are a lot of rules that we need to get them together with top-down analysis from the higher time frame picture, so as to decide whether we are buying or we are selling that pair. I hope everybody has understood me at this level. Yes, okay. Now, I was talking about a PCP pattern, because we have talked about CP pattern. A PCP pattern is an abbreviation too that stands for pre-CP pattern. A CP pattern that has not been formed yet, but since it's a CP, actually it informs you that the continuation of a trend is about to start. How do I know this is a CP pattern? I will know this is a CP pattern. For example, let's assume you have opened this chart and the current price is this candle. We are actually at this candle here. We are actually at this, no. Okay, we are actually at this candle. And we see that the next day price forms the bearish candle. Looking at the chart, we know that price is rising up. Looking at the chart, we know that price is rising up. So since the price is rising up, why is the price falling down? And we see the momentum of price going up is high, because you can see this candle, you can see this candle here, and we can see these CP patterns formed. We have this rally, we have this base, we have this rally, we have this base, we have this rally. So price is trying to show you that a continuation pattern is about to start. So what we do when we see such a price action, we use these stop orders, buying stop or selling stop once the price is going down. So buying stop once the price is going up, selling stop when the price is going down. So if this level or this CP meets the criteria to be tradable, in combine with the multi-time frame analysis, how do you trade it? Then you have to put your buy limit here. At once this price was going down, you have to put your buy limit here, and you wait for the price to continue with the trend. You are not talking about, you are not interested in going against the trend. We have to go with the trend so as to minimize the loss. So you'll put your buying stop here, and once the price comes back the next day, the price, your order is not filled, but the following day your order is filled and the price goes up with you. So this is how we identify the pre-CP pattern. PCP patterns means you have already identified the trend, so you have to trade with the trend. So you're waiting for that CP pattern to be formed, and you trade it before it has not been formed. That means, how do you trade it before it has not been formed? Some people, they'll trade after it has been formed. That means they'll put their orders here, the buying limit orders, because they will, what they think that is, once the price comes back to this level, then it goes up with their orders, right? That's how they will trade. But you trade the PCP pattern. How? By just putting the buying stop orders at the beginning or at the opening price of that candle that starts going against the main trend. Meaning, if the trend is going down, that bullish candle, the opening price of the bullish candle, that is where you put your sell stop. If the price is going up, the opening price of the bearish candle is where you put your buying stop orders. This is how we trade these zones. So this is an example of how do we trade these levels. Actually, you guys, supply and demand has a lot of information, has a lot of knowledge. I cannot deliver all the knowledge right now at this webinar. It doesn't even take, it can even take not even the whole day. It can take few weeks to cover all of them, the knowledge that we are, until to know how to trade these supply and demand zones. So hope everybody has understood how supply and demand, the structures, the scenarios, how the price moves. Price moves by supply and demand means the imbalance between the sellers and buyers. This is the imbalance we are talking about. This is the level whereby sellers and buyers were at equal balance. And once the price moves up, it shows you that the buyers are more compared to the sellers. So this is the place this is the place you are aiming to trade, because this is the place where there is an imbalance between sellers and buyers. That is how we trade the imbalance supply and demand. I will never trade the level whereby the buyers and sellers are equal, because I'm not sure who is in control of the market. That's how we trade them. Okay, so hope you guys have understood. I will do the analysis because the webinar was supposed to be 1 hour. So we'll do analysis of one pair, and you guys will decide which pair. I'm going to open your mic and you'll decide which pair you want us to do the analysis, and I will do the analysis. Okay, participant, unmute all the mic. So do you guys hear me? Hello?
Yes.
Can you guys hear me?
Yes.
Okay, I want you guys to suggest which pair we can do analysis. Can you guys suggest which pair? Hello? Hello?
Oi.
Yes, can you decide which pair you want us to do analysis? Hello? Okay, Euro USD, GBP USD, Euro USD and GBP USD. Okay, fine. So you guys, you want? Okay, we'll take US. We'll take Euro USD here. Okay, we'll take both. Let's do analysis of both Euro GBP and Euro USD. Thank you so much. Okay, we'll start with the Euro USD. No, they will have to ask the questions. I'm going to unmute your mic so that you can be able to ask the questions. Okay. No. This. Okay, fine. All right. Okay, Euro USD, here it is. I had already done the analysis. Okay, I'm going to delete all my analysis so that we can start all together and you understand how I do the analysis. Okay, in a simple way, I'm going to tell you what type of trader am I. I'm a swing trader, so I don't trade intraday tradings, or I don't trade those lower time frames like 1 hour or below the 1 hour. Very few times I go to 1 hour chart and look for the setups. So my time frame combination is monthly, weekly, and daily. And very few times I go to the 4 hours once I want to minimize my risk. So I usually start with the monthly, then I go to the day, to the weekly, and then finally to the daily. But I will trade the direction of the monthly and the weekly by using the daily and 4 hours. Okay, fine. I hope you guys have understood. Okay, this is the monthly. This is the monthly. So far you can see the monthly. I'm not concerned, I'm not actually interested with these informations. I'm not interested with these informations historically, the ones which I'm interested with the recent informations. Okay, this is the chart. I'm going to do analysis. I will start to draw my zones, the ones which we have studied. When I'm drawing the zones, I usually differentiate the weekly, the monthly, and the daily. How do I differentiate the weekly? The monthly actually is the dotted red line. That's why you'll be seeing, that's why you are seeing a lot of dotted lines on my setups. Those are the weekly and monthly zones. So from the start, you can see this level. Okay. You can see this level. Let's start with this from here. Price was rising up despite of the formation of the continuation pattern. I'm talking about the valleys and peaks. I'm the ones who are the ones I'm going to identify right now. Price was rising up, then it pauses here. You can see this level. This level there was a consolidation on the zone. So this is the level where the market pauses. Price was rising up, it pauses, then it drops. This level, this is rise, base, and drop. This is the peak structure of the supply. That means we have rally, we have base, and have a drop. So I will draw two lines. One line is called the proximal line, and one line, and the other line is called the distal line. A proximal line, it is the line that it is close to the current market. If you guys are noting it down, that will be very best. A distal line, it is a line that is far from the current price. How do we know the close and far from the current price? This is the current price that the market closed on Friday. So this line, once I draw this line here, this is close and this is not close. So this is close, this is not close. Hope you guys have understood me. All right, now I'm going to draw these lines. I'm going to draw the proximal line. This is a proximal line. And how do I draw the proximal line? I draw proximal line at the beneath of the basing candles. These are the basing candles. We have 1, we have 2, we have 3, we have 4. This is the basing candle. So I will put my proximal line here at the basing candle. this is what I do, and this is how I've back tested, and this is how the books are saying. But you'll find other people, they put their proximal line, including the weeks. That is fine. That's their rules they are doing. It works for them. It's cool. So I will do how I do to my side. This is how I put the proximal line. I put at the beneath of the basing candle, right? This is the proximal line. Okay, I'll change the color because the monthly has to be red. This is the monthly supply zone, and this, it is the distal line, right? This is the distal line. You can see this price. This is the zone. This is the supply zone, monthly supply zone. Price has not reached there yet, but I have to draw it because price is in movement. It may be not today, not this year, but later on price may come that side, and I will trade that level if I'll be alive. So that level, I have marked it. That's a supply. All right. Okay, we have another level here. We have price once dropped, it never made any price action, because we can never say this, it is the level, because we are not sure of what the price was doing, because price dropped, then it made some sort of doji candle, and then it rallies up, and then it drops, then it drops again and rallies up. So there was nothing done at this period of time. So that level is not a level. That's the reason why this is not a level. Okay. All right. This is the level. So we can see after formation of this price action, price rallies up, and then it formed a sort of a bearish engulfing candle, a peak shape of supply. Price rallies, and then a base was formed by a bearish engulfing candle. I'm interested with this price action behind. So this, it is also a level, right? This is also a level because this is the proximal line and this is the distal line I was talking about, right? So you can see that how the price respected this level. Price dropped once it came back, and then it drops further. This is the level. This is the supply that has been tested once since the price was moving. Okay, that's the level we have drawn it. Okay, we're going to check price after it has dropped down. It rallies up, rallies, it drops, then it rallies up. Once the price rallies up, you can see the price action behind at this level. Price action behind at this level, we have two engulfing candle nested. When I'm talking about nested, I mean engulfing candle followed by engulfing candle. We have bearish engulfing candle and bearish engulfing candle. These are the levels to trade. How do I trade them? This, it is actually a level because the price was rising up without a very beautiful momentum. Let me put it in that word. Without a very beautiful momentum, because price was rising up and falling down, rising and falling. The difference between this level and this level, you can see the falling is very beautiful, but this rising has a lot of pullbacks. So price rose. Once it rose up, it rose. You can see we had a bearish engulfing candle. We had a bearish engulfing candle. So I'm interested with all this level here. All this level here, I'm interested with this level. This is the level I'm going to trade, and this is the level that I will qualify it to be as a supply zone. Some people, you'll find them, they will put this as a level, just a single bearish engulfing candle, and others, they will take as this level to be a supply zone. But it is safe to consider the whole level as like this. So we are going to draw the proximal and distal lines as we did from the previous zones. So this is going to be the proximal line, and this is going to be the distal line, right? That's the level, that's the supply, because price was rising up and then it drops further. So I want you guys to understand here the price action behind. When the price was dropping down, the nature of dropping down, the momentum was very high, but you can check at this level here, we have some sort of the candles with lower momentum. That means, what do I mean when I'm saying lower momentum? Means the body of the candle is smaller compared to other body. You cannot compare this body and this body, this body and this body. That means here the momentum was very low. Reading the price action behind, since the price was falling down and we had the loss of momentum in the market, meaning that there was the pause in the market. This is the level, this is the continuation pattern. Oh, somebody's drawing on it. Oh, okay, guys, you should not draw there. I'm the one responsible to draw. Okay, I was explaining the price action behind. Why will I consider this level to be a supply zone? I will consider this level to be a supply zone due to the price action behind that is formed. You can check. Price was dropping down, and then we had some loss of momentum, and then it drops further with the candlestick with higher momentum, meaning there was the pause on the market. So this is the level we are going to mark. We are going to mark this level because there was the pause in the market. So you can see I have already marked all the supply zones. What about the demand zones? I'm going to mark the demand zones. How am I going to mark the demand zones? Let's start from where the price will start rising. From this level here, when you talk about this, when you talk about price structure, these are the structures I was talking about previously when I started the webinar. Price is rising up, is basing, and then it is rising up. This is the continuation pattern. So this level, I will trade once the price reaches at this level. So this is the level I will put I will mark as my zone. So this is going to be the proximal line, and this is going to be the distal line. That is one of the, so this is the demand. This is the demand zone. Which type of demand zone? This is the CP type of demand zone. Price was rising, and then it bases, then it rises. That is a rally, base and rally structure. Okay. Okay, price when it rises up, you can check. We have another level here. I have another level here. Price once was rising up, it falls down, and then it rises up, forming a bullish engulfing structure. Okay, we can put this as a level, but we have one rule in supply and demand that has to be followed. And that rule says that you cannot cross between the candles. This line is not wanted. You can see, we can cross between the levels where the price has reacted. This is the reaction of the price on the level. This is the reaction of the price on the level. But this is not the reaction of the price on the level. This is not a level to trade. This is not the level, meaning that means price was not doing anything here. It's just a consolidation. So this, we are not going to draw it as a level. So we will go to the recent price action formed. This is the recent price action formed. The recent price action formed, let me talk about this level here. We have a consolidation. Price is not giving us a clear picture of the trend, rising and falling of the price. But we can check after the break of this consolidation zone. The break of this consolidation zone. We have, before the break of this consolidation zone, we have some price action behind that formed the level. We can clarify. Okay, let's check. Price was ranging, and once it hits this, let's mark it as maybe a resistance. Let's mark this as a resistance, maybe. Okay, this is a resistance, maybe. Price, once it hits the resistance level, and then it started dropping. So price was moving between these two levels here. the upper one and the down one. So once price reached the down one, this was dropping, coming to the downside. Price, once it hits this downside, the momentum pushed the price up and breaks this consolidation level. This momentum here, this was dropping and this was rising. So this is the price action behind I'm interested actually to mark on the market. So I will mark this level here. I will mark this level here. This level I will mark as the whole level here, like this. I will mark as the whole level here, like this. Because the price was dropping, first candle dropping, the second candle was dropping, and then we had a consolidation, and then price rose up. So you can see I have already managed to mark all the levels, but recently we can see that price formed another level. After the reaction of this level, price formed another level. This was rallying of the price, we had a base, and then we had a drop. So some people, they will mark this level as the level to trade, because once the time price comes, it may not reach direct to this proximal line. So we'll mark this as a level. So I hope you have understood why did I firstly mark this as a level and then have done this as a level. So from the price action behind, okay, we're about to finish the webinar, but okay, let's finish this pair. We have to go with time. So once we see the nature of the trend, the nature of the trend is just a downtrend. From this trend line, you can check this trend line. The nature of the trend is downtrend market. Price is going down. So price is going down, but it approaches to this demand zone. This is the demand zone price is approaching, and this is the demand zone that price will react. It may either break the level or it may react and moves back up. The probability of breaking it is very low because these levels are made by the financial institutions. So they are the ones who will break and they are the ones who will maintain it. Okay, so we have actually we have already marked all the levels on the monthly. Let's go to the weekly. This is the weekly. The purpose of this level to be visible on the weekly is to know how top-down analysis can be done. So you can see these are the weekly levels. I'm not interested in historical behind, so I'll be interested in the recent price action formed. I've already marked the monthly. Now I'm going to mark the weekly. So now you can see this is the weekly chart. Since this is the weekly chart, how am I going to mark these levels? The same principle I used to mark the monthly. These are the same principle I'm going to use to mark the weekly. You can see price is rising after forming this structure here. This is the level we have considered it to be a monthly demand zone. Price left a gap. A gap is due to higher liquidity of the market, meaning that they cannot start at the price where they ended up last week or last month. So price started, I don't know which month was this. Maybe which year, maybe actually 2017. So at this month, price started at the higher price than the previous month. So it started and it formed a base. So this was the rally, this was the base, and this was a rally. This is a continuation pattern because price was moving up. So this, it is the level. I'm going to mark it for to change the color. It will be blue, so as to know which level your price is. So this is the level. This is the proximal line, and this is the distal line. So this is the weekly demand zone. This may be a weekly. This is actually a weekly demand zone, but it does not meet the requirements we need. It crosses the candles, and which we're not interested in. So we'll trade only the levels that have not crossed the levels, the candles, I mean. So this is the supply. This is the demand, I mean. Demand formed. Okay. Let's come back to this level here. Price fall down. Once price was falling down, it was not moving actually in a good shape, some sort of consolidation, then it falls down again. So once price rose up, it formed this engulfing candle. No matter the shape of an engulfing candle, this is an engulfing candle. Definition of engulfing candle, everybody knows actually, I'm sure, that the engulfed candle opening and close is within the opening and close of the engulfing candle. Engulfed candle opening and close is within the opening and close of the engulfing candle. So this is an engulfed candle, this is an engulfing candle. So opening and close of this candle are within the opening and close of this candle, no matter the highs. So this will be a level to trade. Why? Because price was rising up, then it was falling down, then it was rising up, forming a peak. Price is falling down. So this is the level. You can now understand how I'm reading the price action to identify the levels to trade. All right, so this is the level. Price, once it dropped down, some sort of consolidation, then it was dropping down. Nothing was done here because the price action behind is not that much beautiful. But we had another price action formed by the price. After this too much consolidation on a weekly, these 2 weeks, this many weeks, price was not doing good things. Price dropped, and then it is dropped. This week shows that the price was dropping. So the drop of the price, but buyers came into the market and pushed the price up. Pushing the price up, that means we had a drop and we had a rally. So the rally, it was accompanied with the formation of an engulfing candle. Again, same structure as this one. So I will clarify this as a zone to trade due to the price action. Price was falling down, and then buyers came into the market. They pushed the price up, but pushing the price up, this candle failed to go above the high of this candle. So this engulfing candle shows that the price was going down. I mean, not showing that the price was going down. It shows that, it gives you the price action behind that, what the price was forming. Price was falling down, and then price rose up and formed an engulfing candle. That was the rally and the base and the drop. So we had a rally, a base and a drop. A drop is confirmed by this bearish candle. So we can draw this as a level 2 due to that price action formed. So the level price, once price dropped down, price came back to fill the orders. Orders were filled, then it drops down, then it comes back again, then it has dropped down. So currently we have a downtrend market, but the momentum is not that strong. Trading Euro USD, the momentum is not strong due to the structures of the candles on the monthly. You can all see the momentum at these levels is totally different from the momentum at this level. This is the momentum that people, they are willing to sell. So we will sell here due to the nature of the direction of the monthly. So we have already placed all the zones. These are the last zones we have placed. So I'm done with the weekly. No any zone again to mark, because price here is just forming lows and highs with the candle. We have a low here, we have a high here, we have a low here, we have a high here, we have this low. We can check this candle closed below. Yes, so this candle had a low which is lower than the previous. This is a price action too. You have to consider it when you are doing the analysis. Okay, so let's go to the daily so as to see what we can decide on the market. So we go to the daily. This is the daily. So when we go to the daily, we have all the zones, the weekly and the monthly marked, but we don't have the daily zones. So we have the daily zones. You can see the daily is forming a downtrend market too. So the monthly, the weekly, they are all down. The daily is also down. We have this structure here, very clear structure of a downtrend market. Velke structure. So we are going to mark the levels too. We are going to mark the levels here. We can check here. You can see at that level where price was not doing anything. Look at now. Price rose up. Then it was some sort of consolidation that took many days, and then price rose up again. The rising of the price here and the break of this zone, it's clearly showing you that the price was intending to go up, but there was too much trading in this zone. That means this, we are interested with this level. We have a bearish, we have a bearish, we have a bearish. So we have three bearish, bullish engulfing candles aligned together. So I will mark the same as the other previous zone within a zone you had. I showed you. So this is the bullish engulfing candle, bullish engulfing candle, bullish engulfing candle. So I will mark this as a level. Oh, okay, fine. Sorry. Okay, I have this level. So I will mark this level using this. Actually, you'll not understand why did I make this. This is a Fibonacci tool, but I just configured it to be suitable for me to trade to draw the daily zones. That's very simple. I made what I did to make it suitable to draw the zone is that I went to the setting, and these are the setting I did. I just switched off all these levels, and I was interested with 1 and zeros. I extended the lines to the right, then I wanted the price to be displayed. This is just very simple to figure it out. So this is the way I draw the daily zones. To differentiate the daily and the weekly, now you can understand. So once we go to the price where it is right now, so you can now check the price is within the daily demand zone. Price is inside the daily demand zone. So price is inside the daily demand zone. We have already marked that zone. So let's check this price again. Price was falling down, starting from this level. Price was rising up, then it was falling down, rising up, falling down, rising up, falling down, rising up, falling down, rising up, falling down. We have these engulfing candles here that showed price rose up, falling down. So we have this engulfing candle, that meaning we had a rise, a base, and a drop. That was the a peak form of a supply. So we'll put this level 2. We'll put this level as the supply zone. This is the supply zone. You can check dropping of the price, rising. This is the base actually, because price was rising. If people are trading pattern, this on a lower time frame zone, this will be a flag. Maybe, possibly, will be a flag. So price was just doing some sort of impulse movement. So the impulse movement drop. This was an impulse movement, but we had another massive drop. So this level here is also a supply level, though we have too much tested of this supply level. What do I mean by saying too much tested of the supply level? Price came back, it tested, and it penetrated above the level. So according to my rules, this level is no more tradable, because this candle confirmed that this level is no more tradable, because these orders came through this level and penetrated through that level. That means it is already used up. So I once traded this level, I traded from here until here, then I took my profit. But currently I'm looking forward to which level to trade. I won't trade this level. I will trade this level because this level is fresh. Price has not really reached there. We can draw the trend line from this level here. We can draw the trend line here. So once we draw the trend line from this level here, the break of this trend line will confirm the price to go up to this level, and then we will sell from this level. Why I'm not interested in buying this pair? Because I'm moving against the weekly and the monthly, and I'm the swing trader. I'm trading with the trend. Weekly, the monthly, they are all down. So who am I to buy? So I will buy. If you are a day trader, you will get the profit. If you're a scalper, you'll get the profit. So these are my rules. I will sell once the price reaches here. So my analysis ends there. I will sell once the price reaches here. So the price reaches here. This will be the first TTP. So due to the price has already penetrated to this level, so the same rules I used to disqualify this level are the same rules. I'm not going to trade this level again. The same rules, I'm not going to qualify this level. So this level is used up. So price will drop from this level until this weekly level. Because why? Because currently price is controlled by the weekly supply zone, these blue dashed lines. So example, simple as that. I will wait until price comes here, and then I will sell. Or I will wait until price forms different structures that I will sell from there. Simple as that. Hope all you guys have understood how do I trade. Okay. All right, so I'll close the, okay guys, have you understood, guys? Yeah, I know it's a bit difficult to understand, but we'll go slowly. You'll understand how to trade them. So we'll wait until the price comes here this week, and then we'll sell. Or if price drops more, we'll wait to buy from here. We'll not buy from here in the middle of these two levels. We'll buy once price reaches this higher time frame zone, and we'll sell once price reaches this daily zone. Simple as that. So I hope you all guys have understood. I think I should close now the web now. And sorry for the internet, wasn't very good. Oh, of course. No.